Okay, welcome everyone. We'll start our first modules with me. My name is Anjum Satar. Before starting, a bit introduction from myself. As mentioned, my name Anjum Satar. My email address anjum@ukversity.co.uk. If you have any question, please drop me email and I'll get back to you as soon possible. I'm working with University last 5 years and I'm working various other places like Doncaster College, University of Bradford, and Arden University. So my background, I'm ACCA partly qualified, and I'm in International Business Management, MBA, and BA in Accounting and Finance with PGC as well. So please, if you have, that's all, quick, my background and my qualifications. So if you have any question, feel free, ask me please, because this unit is management accounting and where we're learning about accounting. So please, I'll try my best to meet your expectation. If you have any question, feel free, ask me. If you don't ask me, I don't know. So I'll carry on. Please make sure you will attend the lesson so you can ask cross questioning. If you have any question, feel free. So what's come in your mind, management accounting? Anybody, any thought? What do you know about management accounting? So management, anybody any thought about management? Just think about management. Management is a process of designing an environment to achieve pre-selected objectives. So if you're a manager in an organization, your job to be achieve organization objective. So accounting is meant by systematically record a business transaction. So how will you use management accounting mean our manage our costing, our transactions, our profit, our losses. So management accounting which we use in our organization for internal purposes. So we'll start first. We'll go through what we're supposed to be learn in this module. Unit 5, Management Accounting. Unit level is 4, 15 credit unit. So aim of this unit is to develop your understanding about business environment and organizations where we explore accounting, use financial data planning, and how we can use the costing to make the decision. So first learning outcome, demonstrate and understand the management accounting system. So which will go through management accounting system. So under the management accounting system, our costing system, our inventory evaluation system, our internal control system, where we help to reduce the cost. That's all come under the management accounting. So different costing systems. So those will discuss today lesson. So will be very less numerical. So when the further lessons we'll go through more numericals as well. So please guys, if you have any questions, so we have 4 learning outcome to address. So first we'll go through introduction to management accounting, what is meant by management, inductive contents, what we're supposed to be learn, what is the management accounting, definition of management accounting system, why is it important in our organization role, and the principle of management accounting, difference between financial and management accounting. Then we'll discuss about the costing system. So I'll go through the costing system with you, cost accounting system, inventory management system, job costing system, and price optimization system, optimizing. So how we can these, why information is useful in our organization, all which we'll go through as well. So uh, then we'll go through uh, why the way in information is implemented is need to be understand, and different types of management and accounting reports which we can produce. So that's all our learning outcome one which we're supposed to be addressed during our this lesson, which will be overall discussion will address, So if you have, so I'm going to send you and upload this book as well. So please, guys, it's quite good. Management Accounting is a second edition, so it's recommended by Dexel as well. So please, and published by as well. So and this is recommended for this course. So please, you can go through as well chapter by chapter. You will see there what is meant by management accounting, role of management accounting. Then you will see their costing system, cost evaluation. So that's your chapter 2. that's really is part of. So chapter 1 and chapter 2 today lesson will address as well, and then our discussion will cover some chapter 5 stuff as well, which is management observation and financial accounting, job costing. So you will see there in learning outcome process costing. So that's come all under the costing system. So the discussion is quite big unit in a way, but I'll try to be summarize the things. But if still you want something more in detail, so please ask me and we can go through as well more numerical. But I will keeping in view of the learning outcome, and will try to make sure we'll keep the things as simple we can. Okay, anybody any question? So we know the management accounting. We'll start. So management accounting is a key element of management in the particularly involve the identification. So management accounting involve identification, generation, presentation, interpretation, and use of relevant information. The relevant information, whatever we have, if we want to launch a product, so we're looking the relevant information, how much will cost us this product to be launched, what will be outsourcing cost, what will be the production cost, what will be the distribution cost, what will be advertising cost. So all which will normally we go and will forecast under the management accounting. So as such, it involves the application of accounting, financial management to create, protect, and preserve and increase the value of the stakeholders of the organization concerned. So always management accounting also is to increase the value of the stakeholders. Stakeholders mean anybody who has any interest in the business is called stakeholder. You are the stakeholders in the UK university as a student. So I'm the stakeholder in the UK university as a tutor. So we need to be look around anybody who has any interest or the connection with the organization, and their interest will be influenced by the action of the company. It's called the stakeholders. So next our discussion is the management accounting and financial accounting. Maybe you heard about, oh, I'm chartered accountant. So chartered accountant can be in financial accountant as a financial accountant and the management accountant. If you have a CIMA qualification, Chartered Institute of Management Accountant, that's the management accountant, chartered managers, chartered management accountant. And if you are ACA in the UK, that's we call the financial accountant. That's you can do audit for the company. That's a financial accountant and the financial details. So financial accounting involve recording the financial transaction of an organization, summarize them in periodically financial statement to external users. So key purpose here, financial accounting is external and management accounting is the cost accounting as essential foundation. So cost accounting is a system of recording the data, producing information about the cost for a product and produced by organization or the service is provided. Okay, then we're looking the management accounting and financial accounting. Information mainly produced internally user in the management accounting, but if we are looking the difference, financial accounting is for external use. Like the financial statement anybody can access from the company house in the UK or the company's own website, and it's compulsory for them to publish on the public domain if it's a public limited company. The purpose of information in management accounting, why we need information, because we want planning is also management function. Planning, controlling, and decision making is managers always do plan. They look around the control, they make the decision either will expand our business or not expand business, either launch the product or not launch it. So always the managers is make the decision. So to record the financial performance and position in a period, then the legal, it's not a legal requirement to produce financial accounts, but it's it's not a legal requirement to produce the management accounts, but it's the financial account, yes. Format, don't have a format. You can set up, like costing in different ways, but in the financial accounting, we have a standard and the proper layout which we supposed to be follow. So nature of information, financial and non-financial information that goes in the financial accounting. financial management, but in the financial accounting, mostly the financial time period is based on the uh, historical and the forward looking, but in the financial accounting is mainly based on the historical figure. The what's happened, that's the past information. But in management accounting, more present and future forecast we're looking. What will be the cost in future? Anybody any questions? So feel free, ask me the question. Accounting consists of, what is accounting consist of? Accounting consists of two elements, recording and summarizing. So we record the transaction and we summarize the transaction into financial statements, income statement and statement of financial, particularly in financial accounting. So next we'll look the use and the techniques and the methods. So techniques and the method. So we'll discuss now use of techniques and the method in the management. Use of the technique and the method in the management. There are the various type of management accounting system, such as cost accounting system, inventory management system, job costing system, cost optimization. That's our key learning outcome which we're supposed to be discussed. So please feel free, if you have any question, ask me. Okay, next we're looking data first. What is the difference between data and information? So data is numbers, raw facts, raw things. When data process, it's become an information. If we'll say 10th of the 5th, but and we're not really writing which year and what activity we are doing in those that date and that year, that become an information. So data which processed and proceed is in such a way that is meaningful to the person who receive it is because for the decision making is become an information. So information, always good information, what required, accurate. So information need to be, I'll say, oh, you come, where you come, you do, what you do. So we need accurate with the dates. We need a complete information. Complete. Yes, you have a management course. You have to work on ABC costing, the due date, and you need to be submit. Yes, so we need to look around. Or if we are getting information in the organization, we are buying information. We need to look around the information the company is providing. How accurate? How much is it complete? Is it cost effective? I'm paying £10 to get the people's phone number, and that £10, if what will be, is it what benefit for me to be get the information and use for business purposes? So cost effective, is it the information is understandable, the people can understand information, is not in the language which we can't understand it, is the information is relevant to my decision making or not, accessible, if the information we have, is it accessible or we are providing to the people, information timely, yes, we provide the information people timely so they can make the right decision at the right time at the right place, easy to use. So information need to be easy to use. So that should be consist of keyword accurate, that's say accurate, complete, cost effective, understand, relevant, accessible, timely, and easy to use. So a statement in writing description of overall aims and our organization, that's organization mission statement. Four key element purpose. Why this mission purpose? If we don't have a mission, we don't know the way. Strategies mean the action plan. Why? Policies and cultures and the value of organization we need to understand when we'll deal with the management accounting as well. So planning, decision making, and control. So what's come under planning? Setting the objective for achievement, identify the way these objectives will achieve, and make the decision how the objective can be achieved based on the information provided. Decision making, implement decision, how will implement. We want to reduce the crime rate, but how we'll do it? We need to plan things. We need to make a decision how much we need a budget, how much money will be required. So control, gathering information about actual result, achieve, compare with the actual result, and we're looking, is it budget? You say your budget is money this, but actually you spend it more. Where you spend it, why you spend it, you have to ask the question for the control. So we not go over, and that's why the key term nowadays is responsibility accounting is very important. Okay, data can be primary and secondary. Primary data is the first hand information. the available to public domain, not available to public domain. That's only the first time we are collecting for the certain purposes. Secondary data, the data is already published, that data is normally available on the public domain and no many people already used it. Okay, so discrete and continuous data. Discrete is a non-continuous data. Discrete data is only take certain value of example number of students taking a course. They cannot be half a student. Discrete data is counted. So continuous data is unbroken data that has no gaps. Continuous data can be take on any value within the range. Okay, internal and external sources. So information we can get it internal source, accounting system. Yes, accounting system provides the information. Payroll system provide the information. Strategic planning system is provide the information external. Yes, where we can get the information from the government, other businesses, trade association, financial business press, and internet. Okay, next we're looking the costing system. Anybody any question up to know, guys? Drop me email. Just type in that chat box as well if you're just listening. So difference in the profit is due the method that is used for the costing, as both the profit are calculated with different method using we'll go through the absorption costing. As the word absorb, it means like, if I'll say you're living in a small room and someone living in a house big room, so we need to share the energy cost. So how we'll allocate it? So we need to find the area. Yes, so we need to allocate the cost. So we need to absorb the cost. If we have a canteen department, and canteen department provides services to various other department, HR, marketing, and production. First suppose, and the canteen cost we can observe into other department, because the canteen won't get this separate budget, and their budget need to be get from various other department. They provide the services. So we can say how many people in HR, how many people in production, how many people in marketing department. We add the total people and the canteen cost divided by the total people and times by how many people in each department we have, so we can allocate the cost, we can observe the cost. Okay, then the absorption costing always the costing method expenses are segregated and they are deducted sales, so this leads to increase the expenses or thus lower the profit. Marginal costing method is expense are deducted into two categories, fixed and variable. So we can divide in the absorption costing, we all type of the costs we observe in the fixed end. So all production costs, either fixed or variable, we observe into the product, and then we'll decide what price we'll charge. But in the marginal costing, fixed cost is the periodic cost which will be carry on happening, and the variable cost, the cost will change with the level of output. So we'll add it. So these are the two methods. So full cost, absorption costing, also known as a full cost, where we will observe all costs. But the absorption marginal costing is called all the variable cost. So valuing of unit, total cost, total production cost, but in the marginal costing, marginal variable and production cost. So valuing inventory, opening and closing inventory valued at the production cost, opening and closing inventory value at the marginal costing, it's mean on the variable costing. So fixed cost, fixed production cost carried forward from one period to the next part of the closing in the opening inventory evaluation. Fixed cost is charged full again the profit in the period, not we transfer against or we utilize or sold. So in the units. Anybody any questions? So please ask me. Okay, I'll give you example here. Absorption costing. We have a sale. Quarter 1, Quarter 2, less cost of sales. When we are doing the less cost of sale, so here we are observing variable production costs and the fixed production cost as well. So that give us the gross profit. And then other expenses, those not relating to production. So you will see the Quarter 1 and Quarter 2 profit under this method. So Quarter 1 we have a loss, Quarter 2 we have a profit. So that is called exhaustion costing. So when we look in the marginal costing, we'll see what is the difference. Then you will see there quarter one and quarter two, the sales less variable cost. So we'll minus our variable cost, we'll find the contribution, and then we minus our fixed cost. So we're not looking at the moment other expenses. So that's our profit is come now. That profit is before. So we can other expense can be minus later on. So that is called the marginal costing. Anybody, any question? You will see the difference between marginal costing and absorption costing. Okay, next we're looking the cost object, unit, and the cost center. So cost object, cost unit, and the cost center. So cost card is very important to learn about what make the cost. So if you're calculating the total variable cost, so please for the marginal costing purposes, direct material, the material which you use in the production, direct labor, the labor involved in the actual production of the unit, direct expense, the expense related to the product directly, those expense we can trace within a product that called the direct cost. Direct cost also known as a prime cost as well. So if you heard the word prime cost, so don't need to be worried. That means direct labor, direct material, and plus direct expenses that give you the prime cost. Variable production overheads. So the cost which change with the level of output. Those are overhead, those not directly involved, like a marketing, like admin. These are indirect costs for the business, like accountant fees we are paying end of the year. These are the overhead costs. So that's why the company looking always to reduce overhead costs. So total variable cost is a marginal production cost we have, and then fixed overhead production will minus, we'll say total production cost. So if we'll add the total production cost, then we can observe in each unit of production through absorption costing. So absorption costing considered as a full cost. So non-production, admin, selling, and distribution, those are the non-production. So that's the cost card we can prepare under the both costing methods. So please, if you have any question, ask me. Okay, cost we can classify it into element, nature, function, and behavior. So by element, classifying the cost as whether they're relevant to material and labor. So we'll say this is the material cost, this is the labor cost, this is according to the element. Element is the material and labor normally is required in the production. So this is useful for the cost control. Nature, cost can be as related to production or directly involved in the production and the service. So we'll say is related to the production cost or the service cost or indirect involved in the production or the indirect cost. So that is called the nature of the cost. So when we're looking the function, the cost based on whether the cost production cost or non-production, this is useful for the financial account. So function is the production or the non-production cost. Behavior, the cost based on how change in the relation. So where we'll say fixed cost, the cost which stay the same. Variable cost, the cost which change with the level of output. Semi-variable cost, the cost which include both fixed and variable. Like the home phone in our house, the line rental is a fixed, either you use phone or not, but the call charges are variable cost. So that's meant by element, material, labor, nature, direct, prime and indirect cost, that's come under nature. Function, direct material, direct labor, direct expense, variable for production, non-production, those that come under the function. Behavior, fixed, variable, the cost which change with the step cost, the cost which change with the level of output. So if we'll say first 10,000 will this, next 10,000 will be this, because we have a capacity, up to in the capacity, like think about the classroom, we can sit how many students in a class. So up to that level, as many students we have, the cost will stay the same. But if we'll move to the next, and so then of course, the cost will be carry on changing. So that's called step cost. Cost behavior fixed or variable costs as mentioned. So in the semi-variable, I gave you example of phone charges or the pay as you go meter in the house. You have a was meter charge, and if you use the meter for the electric, you paying the charges as well as a unit charge. So that's called variable cost. Identify the cost behavior. Costs are the contents in the total variable cost per unit, semi-variable, or the step cost per unit. So sometime we have like a telephone cost total is a mixed cost. You don't know, are we are producing unit? We know the total cost. Total is a 10,000. We'll say, okay, we need to calculate, and we use high. We have a 10,000 and 20,000 units. So we'll use high-low method where we looking the high units of cost and the low unit of cost and the difference between the units. And then we divide it so we can find what is the per unit cost. So then we'll times by, so fixed cost meant by stay the fixed and variable cost the change. So we can in this way, by using this method, we can differentiate how much is the fixed, how much is the variable by using high and low method, which will go through some question, will make you more sense of it. Cost of equation are assumed to be linear function, and therefore the equation is a straight line and can be applied. So graph cost is equation y is equal to 5,000 and the tenth is per unit cost and how many. So normally regression you maybe learn about another unit y equal to a plus bx. So when we're looking a plus bx, so you will see there y is the total cost, a is the fixed cost, B is the variable cost per unit, and X is the number of units. So we can calculate and we can show on the graphs as well. Cost code. So especially nowadays we are looking different systems. So code system in the symbol designed to be applied and classified in the set of the item and the brief accurate reference. It's helped entry into the record and and the analysis. Generic function or the function like we'll say this is the cost A B, or we'll say department A D A V 2, we'll say variable cost 2, or we'll say variable cost is labor L, a different code system we can set. So that's different types of the codes which we can use and to set the code, because think about the computer system all about working on the code. You will say give me cost center to home will charge. So that's meant by. Okay. Next we're looking the inventory evaluation methods. Normally we use inventory. Inventory is a stock. The stock. So normally inventory we have three types of inventory in that. If you open your fridge in your house, you have three types of normally inventory inside the fridge. One is the raw material. Think about the meat you bought it. That's the raw material. You not really cooked it. You just bought it. You kept in the fridge. That's the raw material. Then maybe you boiled the meat and you kept in the fridge and because you want to cook later on. So that is called work in progress. So you working on it. Then the third type, it can mean ready. The food is ready to eat. That's a finished good. The goods is ready to sell. So that's like you boil it and you eat it. That is the finished good. So work in progress, raw material inventory, and finished goods inventory. So we can evaluate these inventories on three methods. First in, first out. It's mean the things we bought it first and we shoot to the public on the same price, first in, first out. Many students like it. Maybe some people like, of course, if I'll start early shift, I will go early. First in and first out. So that's the method. The price I bought it and I'll do inventory the things when I bought it the first in, and when I'll issue, I'll keep the inventory valuation the first in, and I'll issue the first out. Like the perishable things where the life shelf life items, so where will it buy the things first? If you don't eat, if in the milk in your fridge, if the milk you bought it first, if you don't eat first, so it will be expired. So this method is very useful when we're dealing with the perishable goods inventory valuation. So last in and first out. So sometime we'll say, okay, last in, the last things we bought it may be expensive, the things we bought it first. So we'll do our issue our inventory based on the last price we bought it. So last in and the first out. So the last thing we bought it, maybe we issue the first to charge and maximize. Of course, we'll keep the closing and opening inventory through this method as well. Then next is the average. I bought on the 5th of the month, 10th of the month, and different prices before issuing and deciding if we want to sell it. So I'll say, okay, my total inventory I have in the stock, how much I paid it, total cost divided by total inventory. I can find the average, and then I can issue the inventory. So that's about the inventory evaluation method. We'll go through some numericals in following lessons. Job costing. So each job is unique. Produce a job cost card. Like you extend a house and builders will give you, oh no, your job is this, we'll charge you this, it's required this. So is a longer job is more cost. The job is count toward the unit. Batch costing. So we are producing in batch goods. So each batch is different, but the item within the batch are identical. So difference the total cost of the batch, the cost per unit, cost per batch, and the number of unit in the batch we produce, so we can calculate. In the service sector, the costing we use is heterogeneity. The output from the service industry is different from the product, where we're looking the product perishability. The service is perishable, so it's just instant. Intangibility, service can't be seen. It's a because we can't store it. Tangible assets is mean we can see it, we can touch it, we can feel it. Intangible, we can't see it, don't have a physical substance. Don't have a physical substance. That's meant by simultaneously production. We produce and sell. It's just, service is instant. So the human mind, if you're not happy with it and you're serving your client, so of course service level will be different. So we need to look around the service and operational cost as well. So suitable cost center, based on the cost center unit or relevant service, may be the necessary to use the composite unit and more than the one type of unit. So think about hotel cost per guest, transport cost per passenger per mile we can, college cost per student, they're costing us in to deliver the course. As hospital, the cost per patient day, and the cost per procedures. Service analysis. So when we'll calculate the cost, we say direct material, direct labor, direct expense. So overhead absorbed. So we'll say total cost. The cost per service unit, the total cost of providing services divided by number of services unit are used provide the services. So we call how many guests we serve, how much is cost. That's all meant by. So next is we're looking at activity-based costing. Is very popular concept. Activity ABC costing, like we'll say when the activity will increase, my cost will increase, and the cost pool will charge as well. So activity is the alternative approach to the product costing. It is the form of absorption costing, but rather than the absorption overhead on the production volume basis. If you produce more, you absorb more. No, we're looking here. If the labor will take more, our labor will. The cost drivers, what drive them, we'll say, okay, each cost driver we need to find, and then we need to allocate the cost. So activity will say, if we'll order many time, our raw material is will be transportation cost each time is the ordering cost. So we'll try to be ordered to good economical, and we'll reduce the cost. If we'll do many activities and many types, so guests come in many different times, it costs us more because our activity level will be increase more. The cost pool is activity that the consumer resource for the overhead that are identified and are allocated. For each cost pool, there should be a cost driver, and the driver is the unit of activity that's the consumed resource. An alternative definition of the cost driver is the factor that influence the of cost. So target costing is all about the target, what really you want. Target costing is a product cost that estimate the drive from the subtracting the desired profit. I want 20% profit. What will be my target cost then? So to be achieved that. So this may be the less than the planned initial cost, but the expected to be achieved the time the product reached to the mature production stage. Anybody any question? So please ask me. Next, we're looking the product life cycle. You may be heard or learn about. So in the product life cycle, in the different stages of the product, we are calculating the cost throughout the life cycle of the product. How much is the product will cost? Development stage can be the product can be at the development stage, like we did the research and development. Then the introductory stage, we really in the process of launching the product, and then the growth stage, and gradually the product will grow and then reach to the maturity. The things we like today, we will don't like the tomorrow. Think about Nokia mobiles, the stages and the people, that's a decline. It's reach at the maturity, then decline. So we need to make sure we'll rectify our things, we'll launch a new thing. So that's why the company carry on. So in that period, what the profit we have and what cost us, so difference, it can be the profit or it can be the loss. So that's it called life cycle costing. We'll go through numerical more and embed example of these all. So today we learn about the basic costing system, ABC costing, marginal costing, absorption costing, product life cycle costing, target costing. So all, and we learn about three inventory evaluation methods: first in, first out, last in, first out, and FCO is the average cost. And we learn about what is the management accounting. Management accounting is the internal, and financial accounting is the external. By law, we don't need to produce the reports to the management accounting, but under the financial accounting, we must need to produce the report after every 12 months. So that's all today lesson, guys. And I'm going to upload this, and recording will be available on the Moodle. So please go through this lesson and go through the chapter of the book which I mentioned you as well. So if you have any question, get back to me and I'll get back to you as soon as possible. So have a wonderful weekend. Hope so we'll speak you and we'll see you some point. So just drop me email if you have any question. So well done. Great. Hope so we'll hear you someone. And great. Have a wonderful weekend. Thank you. Bye bye.